Ever scrolled through social media and seen those ads promising instant cash loans? Maybe you've even considered one yourself, especially if you're facing a financial hurdle. But before you click that Apply Now button, there are a few things you need to understand, especially about lenders like Uprova. So, is Uprova a direct lender? That's the question we're tackling today. But before we dive straight into that, let's unpack what a direct lender even is. Imagine you need a loan for a car. You typically approach a bank or credit union. Those are direct lenders. They have their own money, assess your situation, and decide if you qualify for a loan based on their criteria. They handle the entire process, from application to approval to funding. Now, some lenders don't actually have their own pool of money. They act as a middleman, connecting borrowers with potential lenders. These are indirect lenders. They take your application, some basic information, and then shop it around to different lenders on your behalf. This can be a good option if you have bad credit, as indirect lenders might have a wider network of lenders willing to consider you. Here's the catch. Indirect lenders often charge additional fees for this service. So, while it might get you approved for a loan, it could also mean higher interest rates and extra charges. Okay, so where does Uprova fit into this picture? Here's the thing, Uprova isn't entirely transparent about their lending process. Their website uses phrases like easy-to-use resource for safe online personal loans and prime source for low APR. Sounds good, right? But it doesn't explicitly say whether they're a direct lender or not. This lack of clarity is a bit of a red flag. Generally, direct lenders are upfront about it because it can be a selling point for some borrowers. They know they control the process and might be able to offer more competitive rates. So, while we can't definitively say Uprova isn't a direct lender, there are some clues suggesting otherwise. Here's what we do know. Uprova specializes in bad credit loans. This niche market often attracts indirect lenders who have a network of lenders willing to consider borrowers with less than perfect credit scores.
Uprova mentions fast approvals.
While some direct lenders can offer quick approvals, it's more common for indirect lenders to boast about fast approvals because they're not the ones making the final decision. They simply need to gather your information and get it out to potential lenders. Uprova's website focuses heavily on the ease of application and speed of approval, but it avoids details about interest rates and loan terms. This could be a tactic to get you into the application process without fully understanding the potential costs. Here's the bottom line. Even if Uprova is technically a direct lender, there's a good chance they're working with a network of other lenders behind the scenes. This might not be a deal breaker for everyone, but it's important to be aware of before you apply. So what should you do instead? Shop around. Don't just rely on the first lender you see advertised. Compare rates and terms from different lenders, both online and traditional banks and credit unions. Read the fine print. This might not be the most exciting part, but understanding the interest rates, fees, and repayment terms is crucial before signing any loan agreement. Consider alternatives. Depending on your situation, there might be better options than a high-interest loan. Could you borrow from a friend or family member? Can you cut back on expenses or find a side hustle to generate extra income? Ultimately, the decision is yours. But by being informed and asking the right questions, you can ensure you're making the best financial choice for your situation. With that said, thanks for watching, and until next time.